Bank of Canada overnight rate is a whopping 2 points higher due to the spending primarily driven by the provinces. So governments are spending like drunken sailors, and excess demand produces higher interest rates. And remember the artificial Frankenstein monster rates we've been talking about on the channel for the last 10 years, that things are going to have to give somewhere. Government spending drove interest rates 2 points higher. A combination of spending and transfers to households help produce excess consumption. Scotiabank estimates 200 basis points BPS, or 2 points of the 475 BPS increase to the overnight rate was due to government spending. And you can see it right there. And government consumption expenditure has been outpacing GDP. We also covered that on the channel for a long time now. And you can find it all on our channel. Everything's there. All the videos nicely placed. And Canadian rents outpace income for the first time in 60 years. I think rents have already been outpacing incomes for a long time. Canadian real estate prices will be seeing record growth, just not when it comes to sales. A new research note from BMO shows the annual growth of rental prices grew at a record pace in October. They note that the issue is complicated even further by rents outpacing income growth for the first time in 60 years. So Canadian rental prices are rising the fastest since 1983. Remember what happened in 81, 82, 83? Well, they raised rates. They had to raise rates back then to combat inflation, right? The cost of renting a shelter is raising at the fastest pace. Well, the last inflation crisis, annual growth rents surged 8.2% in October, the highest level since 1983. The bank's calculations show that the whopping 7 points higher than the average seen in the 20-year period prior to the pandemic. They previously warned it would be one of the drivers of sticky inflation, and it's here. So this is over at Better Dwelling if you guys want to check it out. Canadian rents outpace income for the first time in 60 years. So, wow. There it is right there. Wow. And rate cuts might help, but they're likely to make it worse. Yep, because you're hedging. You're not hedging against inflation. The rates were too historically low for too long. Rates were too low for too long, and now inflation is just going to keep kicking in. So the only tool they have left in the toolbox is to raise rates, and we kept telling you guys they need to raise rates. I think I have maybe over 150, 200 videos just dedicated to rate hikes and how they need to raise rates, and it's mandatory they raise rates. And yeah, that's where we're at right now when it comes to inflation. It's double digit. And why do you think Biden was selected? There's a reason why these people get selected into office, right?